I need you to understand something about the week that just happened. While most people were watching the stock market bleed and refreshing Bitcoin's price, 3 things happened that will be talked about for years, and I don't think any of them got the attention that they deserved. A sanctioned nation just started charging Bitcoin to let oil through the most important shipping lane in the world. The most prestigious investment bank on Wall Street launched a Bitcoin product and called it the best performing launch in their entire history. And the Treasury Secretary of the United States and a sitting senator just joined forces to demand Congress pass Bitcoin legislation right now. 3 different layers of the global system: the geopolitical layer, the institutional layer, the legislative layer, all in the same week. If you've been waiting for a sign that Bitcoin has arrived, I'm not sure what more you need. Welcome back to Satoshi. Let's get into it. Let's start with the story that I genuinely could not believe when I first read it. Iran is now charging ships $2 million per vessel to cross the Strait of Hormuz, and they want it paid in Bitcoin. Bitcoin Magazine confirmed it this week. Iran to accept Bitcoin for the Strait of Hormuz transit as ceasefire takes hold. And then the Wall Street Journal published their own piece. Iran's $7.8 billion crypto economy finds a new way to grow after ceasefire. Read that Wall Street headline carefully. Not during the conflict, after the ceasefire. This isn't a wartime emergency measure. Bitcoin is how Iran's economy grows permanently. Now, let me give you the numbers so that you understand the scale. Pre-crisis, roughly 130 ships cross the Strait of Hormuz every single day. At $2 million per ship, that's 3,611 Bitcoin per day, 108,333 Bitcoin per month, and 1 million Bitcoin per year. And here's the number that puts all of that into context. The entire Bitcoin network only mines 450 Bitcoin per day. Iran would be accumulating 8 times the entire monthly supply of Bitcoin every single month from a toll booth at a shipping lane. And when the ceasefire was officially announced this week, Bitcoin pumped above $72,500. The market understood immediately what this meant. Nick Szabo, one of the original cypherpunks, he responded to the news with one sentence: Iran is no longer effectively under sanctions. Do try to keep up with events. He's right. And that one line should send a chill down the spine of everyone who thought sanctions were a permanent tool of control. Here's what this actually means. For 15 years, Bitcoin censorship resistance has been theoretical, a property that Bitcoiners talked about but hadn't really tested on a geopolitical scale. Iran just made it operational. A nation under some of the most severe financial sanctions on earth found a way to monetize control of a critical global checkpoint. And the mechanism is a decentralized monetary network that no government can freeze, no bank can block, and no sanctions regime can stop. Bitcoin was built for this. Satoshi designed it as a system that could move value without permission, without banks, without the dollar system's veto power. For years, it was an idea, but this week, it became infrastructure. And one more thing worth tracking here: oil prices. The Strait of Hormuz is the choke point for roughly 20% of global oil supply. If ceasefire negotiations stall, if Iran tightens the toll, or if more ships start paying in Bitcoin instead of dollars, you'll see it in oil prices before you see it anywhere else. Oil is the canary. Watch closely. Now, I want to be clear. I'm not here to endorse what Iran's government does or how it operates politically. That's none of my business. But the mechanics of what just happened are undeniable. And the implications for every sanctioned nation, every excluded economy, and every person the global financial system has decided to cut off, those implications are enormous. Now, let's come back stateside to Wall Street, because what just happened there this week was equally historic, just in a very different way. Morgan Stanley launched the Morgan Stanley Bitcoin Trust, ticker MSBT, on April 8th, 0.14% expense ratio, the lowest of any Bitcoin ETF on the market. On day one, MSBT pulled in $30 million. And by the end of the first trading session, it had done $34 million in volume. Fortune reported that an analyst put it at the top 1% of ETF launches in history. But here's the line that stopped me. Amy Olenberg, Morgan Stanley's head of digital assets, told Bloomberg directly MSBT was the bank's best performing ETF launch ever.
I have to tell you, in terms of the pickup we saw yesterday, the first day of trading, our best first day of trading for any of our ETFs since we've started the ETF product line a couple years ago. So I think that speaks to the demand that's still out there for the Bitcoin ETF. Almost 1.7 million shares traded yesterday, and at 12 o'clock today, we are already having another good day today. As you said, it's a nice week in the market, a nice day in the market for some pickup in Bitcoin and the markets to help us out there.
Not the best Bitcoin ETF launch, the best ETF launch, full stop, in the entire history of one of the most powerful financial institutions on earth. Think about what Morgan Stanley is for a second. This is not a crypto startup. This is not a venture fund making a speculative bet. Morgan Stanley manages trillions of dollars in client assets. They have been in business since 1935. Their clients include sovereign wealth funds, pension funds, endowments, and some of the wealthiest individuals on earth. And their clients are so hungry for Bitcoin exposure that the product launched as the best thing that the bank has ever released. This is what institutional demand actually looks like. Not BlackRock filing a form, not a press release, a product launch that breaks every record that the bank has. Wall Street's most prestigious firm just told you through the market, which doesn't lie, exactly what it thinks about Bitcoin. And when the biggest names on Bitcoin are launching Bitcoin products, the question is whether your Bitcoin is actually in your control or sitting on someone else's platform. That's where the Bitcoin way comes in. Your personal Bitcoin IT team, self-custody training, cybersecurity, Plan B residency, over 20 years of expertise. They simplify the whole thing so that you stay in complete control of your stack. Book a free 30-minute consultation at thebitcoinway.com/simply. Tell them Satoshi sent you. And then there's Washington. Senator Cynthia Lummis, the Bitcoin senator, one of the most consistent advocates in Congress, posted something this week that I think is going to be one of the most important political moments in Bitcoin's regulatory history. She quoted Treasury Secretary Scott Bessent directly. Now is the time to act. We have the administration, the momentum, and we've made bipartisan progress. Congress must pass the Clarity Act now. The Clarity Act is the most comprehensive piece of Bitcoin and digital asset legislation ever attempted in the United States. It would formally define what Bitcoin is under law, clarify which regulator has jurisdiction, and give the industry the legal certainty it has been waiting for years. The Treasury Secretary and a sitting Bitcoin senator are publicly demanding it gets passed this week. But here's where it gets complicated, and there's a few reasons, so try to keep up. Representative French Hill, who chairs the House Financial Services Committee, told reporters the timeline might slip into next year. There's a sticking point in the Senate over stablecoin yield provisions. The reconciliation process with the House isn't resolved. So we have Bessent and Lummis saying now and French Hill saying maybe next year. But the thing is, we might not have next year because we have no idea what is going to happen in the midterms. First of all, Senator Cynthia Lummis is not running for re-election, and frankly, Trump has kind of been throwing the Republican Party in the gutter, and we're not sure if Democrats will back this bill up. So, in my opinion, we're kind of playing with fire there. But that tension is worth watching because if the Clarity Act does pass, it changes the entire landscape for Bitcoin in America. Institutions that have been waiting on the sidelines get greenlit. Capital that has been sitting in limbo gets deployed. And the regulatory uncertainty that has suppressed Bitcoin adoption for years disappears. And if it doesn't pass, the window closes. And again, with an election cycle coming, another delay could mean years. The momentum is real. The opposition is also real. So this one isn't over. So now let me zoom all the way out for a second. 3 stories, 3 different layers of the global system, all in the same week. At the geopolitical layer, a sanctioned nation is using Bitcoin as a mechanism to monetize the world's most critical oil shipping lane. That's Bitcoin functioning as a parallel financial system, not in theory, but in practice, at scale. Right now. At the institutional layer, Morgan Stanley, one of the oldest and most respected financial institutions on earth, just launched what they're calling the best product in their history. Their clients wanted Bitcoin so badly that a 91-year-old bank broke every record it had ever set to give it to them. At the legislative layer, the Treasury Secretary of the United States and a Bitcoin senator are publicly demanding Congress pass the most significant Bitcoin legislation ever written. And they're calling it urgent. This is what adoption actually looks like. Not the price going up, although it did go up. Not a tweet going viral, although many tweets went viral this week. My point is, the actual infrastructure of global finance, geopolitical, institutional, regulatory, bending the knee towards Bitcoin simultaneously. I've been in the space long enough to have heard this is the year about 10 million times, but I want to be honest with you, this week it felt different. This week it felt like this might actually be the year. Not because the price did something, which it did, but because the 3 stories this week happened at levels of the system that have never moved before. Iran doesn't care about the 4-year cycle. Morgan Stanley doesn't care about the 4-year cycle. Scott Bessent doesn't care about the 4-year cycle. Well, not this one anyway. He cares about the political 4-year cycle. But again, I digress. They care about whether Bitcoin works. And this week, at every layer, the answer was yes. It worked! And if this week convinced you that it's actually time to own some Bitcoin, here's the cleanest way to do it. Bitcoin Well is the self-custody Bitcoin on-ramp. You buy Bitcoin directly into your personal wallet. No custodial risk, non-custodial by design, trusted by 50,000 plus users, publicly traded, daily recurring buys available. Sign up at bitcoinwell.com/simplybtc. Through our link, you get 3 chances to win 1,000,000 sats. That's 0.01 Bitcoin. Not nothing. So sign up at bitcoinwell.com/simplybtc. So here are some quick hits for what's coming. 5 things I'm watching. 1, the price. Duh. Bitcoin hit $72,500 on the ceasefire announcement and has been holding strong. The sailor thesis that the 4-year cycle is dead and the price is now driven by capital flow gets tested every week. So watch how Bitcoin responds to the next macro event. A sustained break above 75,000 would be significant. Number 2, the Strait of Hormuz. The ceasefire is 45 days. Watch whether Iran's Bitcoin toll infrastructure stays in place as negotiations continue or whether it quietly becomes permanent. The Wall Street Journal called it a new way for Iran's economy to grow. If that framing sticks, this is no longer a conflict story, it's a monetary system story. And the number to watch alongside it is oil. The Strait carries about 20% of the global oil supply. Any escalation, any renegotiation of the toll, any breakdown in ceasefire talks, and you'll see it in the oil price first. Oil spikes, Bitcoin is likely to follow, so keep an eye on both of them. Number 3, Morgan Stanley ETF inflows. Week 2 tells you everything. Day 1 numbers for MSBT were record-breaking, but institutional products live or die on sustained inflows. If the second week matches the first, every other Wall Street firm that's been sitting on the fences starts to move. Watch the Bloomberg ETF flow data for that one. Number 4, the Clarity Act. Lummis and Besant are pushing hard. French Hill is pumping the brakes. The stablecoin yield sticking point needs to get resolved before this moves to a floor vote. So if you see a bipartisan agreement on that specific issue announced, that's a signal that the bill is actually moving. And number 5, and this was one that I know no Bitcoiner wants to talk about, but we must, is tax day. April 15th is right around the corner, and if you hold Bitcoin, you already know what that means. Every sale, every swap, every transaction is a potential taxable event. If you haven't figured out your Bitcoin taxes yet, this is your last week to get ahead of it, which brings me to something that I want to mention quickly. If you're a Bitcoin holder and taxes are stressing you out, SAS Mining specializes in exactly this: Bitcoin mining and tax strategy for holders. Check them out at sasmining.com or scan the QR code below. And if you want to be in the rooms where Bitcoin's future gets decided, Mining Disrupt is where that happens. The world's largest Bitcoin mining expo, biggest names in the industry, cutting-edge rigs, Bitcoin and AI integration, live stream keynotes, and networking you cannot get anywhere else. Grab your tickets at miningdisrupt.com and use promo code SimplyBitcoin for 20% off. Do not sleep on this. I want to leave you with one thought. Nick Szabo said Iran is no longer effectively under sanctions. Amy Oldenburg says Morgan Stanley's Bitcoin ETF was Morgan Stanley's best launch ever. Scott Besson said now is the time to act. 3 different people, 3 different corners of the world, all pointing at Bitcoin in the same week. The question isn't whether Bitcoin is arriving anymore. The question is whether you're ready when it does. Thanks for watching Simply Bitcoin's Satoshi. Don't forget to smash the like button, share the show with your friends, drop a comment below because I read them all. Follow me on X at InternetSophie, and as always, stack, slay, and stay bullish, baby.